When the farmer wants more harvest, he does not chase away the seedlings. My people, this is Arise News, and today we are breaking down one of the most significant tax reforms in recent Nigerian history. On Tuesday, March 3rd, 2026, the federal government signed new tax regulations banning roadblocks for tax collection and introducing a simplified presumptive tax system for micro, small and medium enterprises, MSMEs. Before we go deep into the implications, I want you to pay close attention to what this means on the ground. If you are a transporter, trader, small shop owner or manufacturer, this reform directly affects you. Watch how enforcement unfolds in your state. Observe whether roadblocks disappear. Monitor how digital compliance is implemented, because policy is one thing, enforcement is another. Now, here are the core changes. First, the federal government has officially banned the mounting of roadblocks or highway collection points by tax officials and so-called unofficial agents. For years, businesses and transporters have complained about harassment, extortion, and multiple levies collected at state and local government checkpoints. Under the new regulation, such practices are now illegal nationwide. No more stopping trucks on highways to demand tax clearance. No more roadside levies under the guise of enforcement. Second, the government has banned cash tax payments. From now on, all tax payments must go through approved digital or banking channels. The aim is transparency and traceability. If implemented properly, this could significantly reduce leakages and under-the-table collections that have long plagued Nigeria's tax system. This directive applies across the country, including at sub-national levels. That is important, because much of the harassment businesses face happens not at the federal level, but through fragmented state and local government practices. By centralizing standards and banning coercive roadside enforcement, the government is signaling a shift towards structured, digitized administration. But that is only half of the reform. The second half, and perhaps most transformative, is the introduction of a new presumptive tax framework for MSMEs. Let's break that down in plain language. Under this new system, qualifying informal businesses will pay a flat 1% tax on turnover instead of being subjected to complex profit assessments. In other words, rather than calculating profit margins, which many small businesses do not formally document, the tax authority will apply a simple percentage to total turnover. This is meant to simplify compliance and reduce disputes between tax officials and small operators. There is also an exemption threshold designed to protect the smallest players. Businesses with annual turnover of 12 million naira or below, often classified as nano or micro enterprises, are fully exempt from this regime. That means subsistence-level traders and small-scale operators will not be dragged into the new tax net. Some reports further indicate that broader 2026 reforms may extend exemptions up to 50 million naira annual turnover for small businesses under certain classifications. If fully implemented, this would represent one of the most protective tax shields for small enterprises in Nigeria's history. Perhaps one of the most significant aspects of this reform is the elimination of what was known as best of judgment assessments. In the past, tax officials could issue discretionary tax bills based on perceived wealth or estimated business capacity. This often led to arbitrary assessments, disputes, and allegations of intimidation. The new framework replaces that system with clear turnover bands and structured rates. That is a major institutional shift. Midway through this discussion, let's reflect with a proverb. When the rules are clear, the game becomes fair. For many MSMEs, unpredictability, not just tax rates, has been the biggest challenge. If this new system truly standardizes assessments, it could reduce friction between businesses and tax authorities. The reform also pushes digital integration. MSMEs are encouraged to adopt digital tax identification platforms not only for compliance, but also to unlock access to formal credit, insurance, and financial services. This is strategic. By bringing informal businesses into a traceable digital ecosystem, the government hopes to expand financial inclusion while broadening the tax base. This reform is part of a larger institutional transition. The Federal Inland Tax Service (FIRS) is evolving into the Nigeria Revenue Service (NRS). The goal is unified collection, digital oversight, and reduced fragmentation across revenue authorities. The unveiling was led by Finance Minister Wale Edu and the Executive Secretary of the Joint Revenue Board, Olusegun Adesokun, signaling high-level backing for the initiative. Strategically, this aligns with President Bola Ahmed Tinubu's broader economic ambition, building a $1 trillion economy by 2030. The administration has repeatedly emphasized expanding the tax base without taxing poverty. In simple terms, the goal is to collect more efficiently from more participants without crushing the smallest operators. But here's where analysis becomes necessary. Will this reform truly eliminate roadside extortion, or will enforcement simply shift tactics? Nigeria has seen policy announcements before that struggled at implementation stage. The real test will be whether state and local governments comply, whether security agencies enforce the ban on roadblocks, and whether digital systems are robust enough to handle nationwide compliance. There is also the issue of awareness. Millions of small businesses operate outside formal networks. If they don't understand the new system, confusion could create new vulnerabilities. Education campaigns, simplified registration processes, and technical support will be essential. For transporters especially, this reform could be transformative. For years, interstate haulage operators have complained about multiple checkpoints demanding various levies. If the ban is enforced, logistics costs may decrease. Lower transport costs could in turn ease inflationary pressure on goods. But again, enforcement will determine impact.
For MSMEs, the 1% turnover tax presents both relief and responsibility. Relief because compliance becomes simpler. Responsibility because digital tracking reduces room for underreporting. Businesses that previously operated entirely in cash may now need to formalize operations. That transition can be empowering, but it can also be intimidating without proper support structures. Another dimension is public trust. Nigeria's tax-to-GDP ratio remains one of the lowest globally. Citizens often argue that taxation must be matched with visible public service delivery. If the government wants broader compliance, it must demonstrate that tax revenue translates into infrastructure, security, healthcare, and education improvements. Otherwise, resistance may persist despite simplified rules. One sharp question for you watching. Do you believe banning roadblocks and cash collection will truly end tax harassment in your state? Drop your experience in the comments, because real reform is measured by what happens on the streets, not just what is written on paper. As we close, let's summarize the verified highlights. Roadblocks and highway tax collection points are officially banned nationwide. Cash tax payments are prohibited. Digital and bank channels are now mandatory. A new 1% presumptive turnover tax has been introduced for qualifying MSMEs. Businesses earning 12 million naira or below annually are exempt. Arbitrary best-of-judgment assessments have been eliminated. And the reforms are part of a broader transformation from FIRS to NRS under the Tinubu administration's economic expansion strategy. Final proverb: you do not milk a cow by beating it. Sustainable revenue comes from partnership, not pressure. If implemented faithfully, this reform could reshape Nigeria's tax culture, from coercion to compliance, from fragmentation to structure. Stay informed. Watch how your state responds. This is Arise News, bringing you clarity beyond the headlines.